Welcome to your weekly market update. We're all on pins and needles. It's Wednesday, January 11th. I'm shooting this about 10 a.m. Tomorrow is the big consumer price index report. Comes out at 8:30 Eastern time. Remember, this is the index that the Federal Reserve looks at to measure inflation and what its growth is year over year. Right now, we sit at 6% year over year. Tomorrow's number is December 2022, and this will replace December 2021. So the markets are expecting about a 0.3% CPI increase. That's fairly tamed inflation, right? And this should replace the 0.3, will replace the 0.6. Let me show you on the charts. It will replace December 2021's 0.6, right? So why this 6-year inflation average is starting to come down is because November, December, and January, tomorrow's report is December, will replace December 2021 of 0.6. So the markets are very confident that the inflation is going to come down, but by how much? The markets are expecting 0.3%, which was what we saw October released in November, right? If we get another 0.2%, like we got in November, that will be really, really good for the markets, right? And I think you'll see a massive bond rally, and I think you'll see a big stock market rally. So remember, we had some bad news on Friday with jobs lost, massive layoffs by Amazon, by Salesforce. I know those things are bad for the people that go through it. They're not good for our economy. Those are signs of recessions, but that's good for mortgage rates. That's good for real estate. Remember, real estate stays strong through almost all recessions except the financial crisis, which was created by the real estate industry. This recession is not created by the real estate industry. So looking back to 1960, 12 out of the last 13 recessions, real estate either stayed stable or went up. Every single time, 13 out of 13, mortgage rates went down. So we stand by mortgage rates coming down April, May. That might seem natural for you to wait until those rates come down. I believe that's a bad idea. You'll see there are a lot of buyers on the sidelines right now waiting for that. You'll see a ton of competition. You might not get the place you like. You definitely won't get it at the prices that people are getting at right now, and you are likely to not get repairs done if there's multiple offers going on. So you want to be a buyer in a place that others aren't buying. I know that seems counterintuitive, but you always want to do kind of the opposite of what the general public's doing. So with a lot of buyers on the sidelines right now waiting for rates to come down, this is your time to negotiate a price. And then when those rates come down, you refinance. So I hope that makes sense. If we can run any numbers for you, please let me know. But we have several buyers over the last 2 weeks that have been looking for a year, getting deals that they weren't even close to getting 6 months ago or a year ago. So prices are coming down a bit. Nationally, they're down about 2.5%. Now, people think that's a signal of a real estate collapse. You have to remember, real estate has went up 39% the last 2 years. It's very natural to pull back slightly, and for it not to be more than that just shows the strength in real estate. So I've been a buyer of real estate in this market. I would encourage you to do so. These are the times that I think are best, and I don't think they'll last much past April or May. So you got about a 90-day window to get a good deal. And I think past that, you're going to have a lot of buyer demand and you're not going to get those good deals. So if we can run any numbers for you, if we can support anything on your home search, realtors, you have any buyers that we need to help get off the fence, these are the things that prove that. Fingers crossed for a good CPI to report tomorrow. It could be the report that spurs on what I don't think is going to happen till really around April or May, but mortgage rates coming down substantially, which will kick up buyer demand, which will get you, the buyer, not as good a deal as if you buy now. So I'm standing by. This is a great buyer's market, and I think it will remain so until about April or May.